made a post yesterday on the natural gas ETF, UNG, and how I was bullish over the longer term. And here's why. This article is coming from the Telegraph by way of Yahoo Finance. Putin threatens Europe with fresh gas crisis. So the article reads, Russia has warned Europe that it faces a fresh gas crisis next winter as it scrambles to restock reserves as Putin launches a new attempt to weaponize energy. Gazprom, the Russian state-owned gas supplier, said Europe had made it through winter despite cuts in Russian gas supplies owing to mild temperatures, but warned there is no guarantee that nature will make such a gift again. In a statement on Twitter, it said restocking for next winter would not be easy. Russian curbed pipeline gas supplies to Europe last year in retaliation for sanctions. The scramble to replace Russian gas with imports from around the world triggered a surge in prices and a major cost of living crisis that has cost Europe's governments billions in euros. However, Europe is now emerging from winter with gas stocks more than half full, close to record highs for this time year. So it definitely was a mild winter in the U.S. on the East Coast and also in Europe. I think Rome itself avoided, I think, 3 months of heating days. Um, you know, the world is getting hotter, right? Um, so this Mr. Froley guy says because industries and consumers cut their demand because of higher prices and it was a mild winter, Europe has a lot more gas and storage than you would have expected. So most of our modeling, it should be pretty achievable for Europe to refill gas storage ahead of next winter. We don't expect any enormous price spikes this summer of the type that we saw last year. However, he warned that cold weather next winter could yet push up demand and prices again. So energy is really a fundamental story. It's really all about supply and demand, right? And weather has a huge factor to um, play. So if we go to the natural gas futures chart, just want to go to the daily chart, the monthly chart. So I have a daily buyer zone at 150. However, the bulls have been defending this $2 level for the past 3 months. Why $2? Well, the only thing I can think of is that it's a round hole psychological number. And if the end of the month was today, well, this candle would close green, which would be the second green candle, monthly candle, in in 5 months. All right, if we go down to the weekly, so is this a double bottom formation forming? Possibly. At a minimum, we do see divergence. If you look at the RSI, it's actually made a higher low while price action is showing an equal low. Now this week's candle is bouncing off the 13 simple moving average. So I would anticipate that prices are going to be range bound over the next several weeks at least. But if we get a close close on the weekly above the 13 simple moving average, that would be bullish as well. The last time that happened was back in December. If we go to the daily chart, price was hitting the 13 simple moving average on the weekly, but you can see we have support. Support has become resistance. So this 240 level is critical. A close above 240 on the daily chart, a close above 240 on the weekly chart, which would be a close above the 13 simple moving average, would be bullish. Over the weekend, I'm going to analyze the UNG options. A potential play is to buy leap call options and then sell the front months to recoup some of your initial expense while you wait for price to continue to base and potentially rise over time, whether it be this winter or next winter. If you go to the monthly chart, gas is selling at a discount. So if you have a long time horizon, you might consider placing a play on natural gas through the ETF UNG. Thanks for watching. Subscribe. Please like the video.